Bill Miller, volatility is the price of return. Brilliant investor. No, Dom, I wouldn't be 100% invested in Bitcoin because I am not 100% certain it is going higher. I believe it is, but I cannot possibly be 100% certain about it. What I am 100% certain of, and this is what you have to bank on, fiat is programmed to debase. That is the certainty. That is the math. That is the mathematics of a debt spiral where they have to print money to meet the interest expense obligation.
ARK Invest, one of the prominent companies competing for a Bitcoin exchange-traded fund spot, has made amendments to its SEC filing by adding a surveillance and sharing agreement. This modification comes after BlackRock's filing for its own Bitcoin ETF, which did not include such an agreement. ARK had submitted its proposal to the SEC in April, almost 2 months before BlackRock's application. The revised filing by ARK may potentially give them an advantage in crossing the finish line first. A surveillance sharing agreement entails sharing information with regulators to prevent potential market manipulation. This includes data on market trading activity, clearing activity, and customer identification. The SEC has emphasized that none of the applicants have demonstrated sufficient measures to protect investors against manipulative practices. Greg Foss, currently serving as the Executive Director of Strategic Initiatives for Validus Power Corporation and a well-known Bitcoin enthusiast, shares his perspective on ETFs and why their mainstream adoption might face delays even after receiving approval from the SEC. He also offers insights on bonds, other investment assets, and available options.
Investment decision in my life, which is to move some of the exposure from government bonds, which is a soft asset, into the hardest asset that man has ever created. It's called Bitcoin, and you don't need to have 100% of your portfolio in it. But if you did, you'd only have to employ one person. And maybe there is the efficiencies that come with that. I am not advocating 100% position, though, for Ontario teachers, but get off of zero, please, on behalf of all of the hardworking Canadian teachers that perhaps don't know how to manage risk themselves. Not your keys, not your coins. 100% true. But let's understand that there's tax-advantaged accounts in Canada in which the government essentially gives you a 50% tax rebate if you own Bitcoin in Canada, called your RRSP, which is a registered retirement savings plan. I'm a huge fan of cold storage. I own Bitcoin in cold storage, but I also own Canadian ETFs because I view it as, in my tax advantage account, I can get $1.50's worth of Bitcoin for $1 investment equivalent. Okay. And that's important. And, you know, you have to balance the risks and returns. I'm proud that Elliott is one of the multiple ETF providers in Canada. I believe his pricing mechanism is one of the most ingenious of the products out there. But talking bigger picture, it is important to understand that a lot of people, particularly my age, love Bitcoin when it has a QSIP attached. And that's lost on a lot of people. For those out there that don't know what a QSIP is, it's an identifier for any exchange traded product. It will identify alphanumerically whether the product is an ETF, a bond, a stock, all of these things. But when you manage money and your systems are predominantly set up with an identifier as being one of the main, probably the key component of any database, once it has a QSIP, you open Bitcoin ability to be allocated anywhere. And any analysis. There's so many legacy platforms that probably, you know, couldn't even accept Bitcoin until it has a QSIP. So well done, Elliott. The Canadian government is subsidizing your purchase of Bitcoin. I'm all for that. And that's why I would hold both. Ultimately, cold storage is the solution. But in terms of tax advantaged accounts, bring it with an ETF and low basis risk, high liquidity, good market makers, creation redemption features. I believe it's all good for the ecosystem. It's just one more on-ramp.
Bank of America is currently facing the repercussions of decisions made 3 years ago when it allocated the majority of its $670 billion pandemic-era deposit inflows into debt markets. At that time, bond prices were historically high while yields were low. As a result, Bank of America, the second largest bank in the United States by assets, suffered over $100 billion in paper losses by the end of the first quarter, surpassing the unrealized bond market losses reported by its largest peers. Greg Foss, a financial expert, strongly advises exiting bonds, and the reasons behind his comment will be revealed shortly.
Coming from the bond markets, I do appreciate the liquidity that's provided in global global bond markets and the U.S. bond market in particular. I mean, that allocation up there at 27%, that's high. I will note that it was probably higher, and on a mark-to-market basis, since most global bonds have been shredded in the last 2 years, it's come down, or they did a proper duration exposure. That being said, I wrote a paper on this. It's what sort of got me some Twitter fame, is why every fixed income portfolio, every single fixed income portfolio in the world, in my opinion, needs some allocation to Bitcoin, which means my first and favorite spot of taking an allocation from is from the bond portion. Now, I may argue that Microsoft at 7% of the portfolio, damn, those are some pretty big gonads these guys have, that they're rolling the ball on Bill Gates. Well, not Bill Gates anymore, but you know what I'm saying. There's mixing and matching that can go on. So I would take it out of the bond market, but I'm not fussy. I just need to get it into Bitcoin somehow. And then, more importantly than perhaps the allocation, is your rebalancing assumptions and how you're going to monitor that position and manage the risk according to the price swings. And that can be the difference between positive returns and negative returns if you're effectively dollar cost averaging in both directions. So, there's big decisions to be made here. Once again, we have a tool that you can get to the brass tacks on, which is the Nakamoto portfolio tool that Hoffa has put together. I'll just say this. I already know what my answer is, and it's crazy, but it is far higher than the 2%, but it's not the 25% allocation that is the optimal, okay? We're not arguing with anything here. The optimal portfolio allocation, according to Hoffa's math with respect to the asset allocations that the teachers have made, is a 25% allocation to Bitcoin. Oh my God. Because at the end of the day, this fund, if I'm not mistaken, what's the size of the fund? Hoffa, at least 400 billion US dollars, yeah?
250 billion, I think, right around there.
It's only okay. I'm disappointed. Come on, teachers, get your contributions higher. But anyway, as pension funds go in Canada, that's still huge. The largest fund in Canada, if I'm not mistaken, is somewhere around 600 to 800 billion. But that being said, imagine if you're still 250 billion, and all of a sudden you're putting 25% of your portfolio in that. That's $50 billion of buying into one fund, into a $500 billion asset class. You couldn't do it. It would be impossible. So you have to consider the liquidity constraints in the market as well. So I know my number. Wait until close. I'll wait until the next boys give their things. It's more than zero, and it's not as high as 25%. But come out of your bond portfolio, please.
Wealthy UK investors are rushing to buy tax-free gilts as yields soar, with a nearly tenfold increase in direct bond trading compared to the previous year. The majority of this activity is concentrated on gilts, driven by investors seeking the financial planning benefits and tax advantages they offer. Short maturity gilts, in particular, are in high demand, with investors holding them until maturity to secure yields exceeding 5%. In the realm of ETFs, the SEC is yet to approve an application for a Bitcoin ETF based on the underlying asset traded on unregulated exchanges. However, multiple players, including Invesco, WisdomTree, Bitwise, ARK Investment Management, and Valkyrie, have refiled their spot Bitcoin ETF applications with modifications after previous rejections. ARK Invest currently holds an advantage in the race, with the SEC expected to make a ruling on its application by August 13th. Meanwhile, the discount on the net asset value of the world's largest crypto fund, Grayscale Bitcoin Trust, has narrowed sharply to a 9-month low of 31.3%. Grayscale is suing the SEC for refusing its request to convert GBTC into an ETF, which, if approved, could eliminate the discount. There is optimism surrounding ETF approval, given BlackRock's strong track record, with 575 filings approved by the SEC and only one rejection. The chances of approval for the current applications are estimated at 50-50. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.